Everyone must pay their fair share in taxes. This is a common cliche to try and increase taxes on the rich while providing tax breaks to the poor, because this is considered fair. However, imposing taxes on the rich can be quite challenging and not as easy as some people think. Because every time there's a new tax that's imposed that are supposed to be on the rich, it ends up actually impacting the middle class and poor more. A common solution that is often proposed to tax the rich is a luxury tax or a tax on supercars and yachts, only items that rich people can afford. This is a targeted tax, so it would only be imposed on the rich, which would be a perfect solution to our problem. Or is it? Spoiler alert, it is not. The main purpose of a luxury tax is to increase the revenue of the government and decrease the excessive spending on non-essential items. The idea behind this is that if the government imposes taxes on these luxury items, that the increased price will decrease the demand for the good and thus decreasing the consumption of these luxury goods. On paper, economically, this is very sound. You increase the price, that decreases demand for that good, and thus the consumption of that good also decreases. But it's a little more complicated than that. What luxury taxes also do is decrease wealth inequality. So the more that the rich spend on luxury goods, the more they will pay in taxes, and that taxes are then redistributed to middle and lower class citizens. The issue with luxury taxes is that it's not as effective as some people may think. The rich have a way of avoiding these taxes through purchasing these luxury goods in other countries where there is no luxury tax, or they use the knowledge of the tax code to avoid it, maybe like buying these luxury goods through a business rather than buying it individually. Also, luxury taxes might actually hurt the economy, because if the rich decrease spending on luxury goods, then that means the manufacturers of these goods will have a decreased revenue, which hurts the economy. A healthy economy requires a lot of cash flow of buying and selling of goods and services. So by imposing taxes and decreasing the amount of goods and services sold, you are actually hurting the economy rather than helping. This is why it's so difficult to actually tax the rich, because they have the ability and freedom to go to other countries to pay for goods and services and find the place where they're paying the least amount of money and the least amount of taxes. What is good about that is this means countries will have to play a tax policy capitalism, which is they will be fighting to have the best tax policy for where people purchase goods and services. You want to have a low tax so that way the rich go to your country to buy goods and services, because buying goods and services in your country is beneficial for your economy. This idea of going to other countries to pay less taxes is very popular among countries who have a high import tax or high tariffs. Avoiding taxes is so popular that in these countries with high tariffs, there's actually companies that will package together a vacation with a product that you can buy. So you go and fly to a different country and buy a product, and it will actually be cheaper than getting that product within your same country. So you're getting a vacation and the product for the same price you would get the product in your own country. This is very popular with like electronics, so an iPhone or an iPad. They would fly you out to the United States and you would get the iPhone or iPad, but you'd also get the vacation in the United States, and it'd be cheaper than if you were to buy that Apple product in your own country. That's how tariffs and tax can really hurt your economy within your country. That idea kind of forces the hand of some governments to reduce the taxes on large corporations or luxury goods and items, so that way they can get rich people and a booming economy within their country. Otherwise, these large corporations or billionaires would go to another country and purchase their goods and services there so they can pay less taxes. This is also prevalent in not only between countries, but between states in the United States. For example, if you were to create a company, if you create it in Delaware, you pay $0 in taxes to the state of Delaware. And what this has done, people have created more businesses in Delaware than there are people actually living in Delaware. All because of that tax break. Now, Delaware still does get their money because they get some money for you applying for your LLC, but you save some money by not having to pay recurring taxes each year. So now if any state wants to get some tax revenue by having someone start their LLC in their state, they have to then compete with the zero taxes you have to pay with Delaware. So this is the same idea with taxing the rich with a luxury tax. All they would do is just go to a different country and purchase that same luxury item in a different country where there's less taxes. And it's why that tax system doesn't work. It works good on paper, but we don't live on paper. We live in the real world. That's one of the many reasons why it's near impossible to actually tax the rich. Their freedom and ability to find the lowest tax rate makes it very hard to actually tax them.